a short introduction. As you see, the whole issue of the seminar is to discuss important elements when in a moment when we have to both look at reconstruction and transformation. One key element is Agenda 2030 and what it means to align with Agenda 2030. And I quote this name on purpose. It's complicated to align with an agenda that is made out of 17 objectives, but at the same time, that's the wording that was chosen by the G7 presidency last year, aligning with Agenda 2030. So I think that's a key element of discussion of how we can reorient our economy to align with Agenda 2030. And the second question is how to make that at scale. But we are not discussing that in general, but in particular about the roles of public development banks that we believe have a key role to play in these particularly critical moments of where we need to look at reconstruction. Few elements of background. Yes, we are at a crucial moment. We need to do actually three things at the same time. First, deal with the ongoing health and socioeconomic crisis because it's not over. Second, reconstruct our economies. And third, transform towards Agenda 2030. The UN Secretary General Antonio Guterres has phrased that very early this year during the crisis. We need to build back better. And by saying that, he was really stating that Agenda 2030 remains the compass, even when we need to deal with this crisis, because it's through Agenda 2030 that we can take into account the necessity to restart our economies, the necessity to reduce inequalities and vulnerabilities, and also the necessity to tackle the root causes of the crisis and of the vulnerabilities in climate degradation or biodiversity degradation. But of course, different countries and different territories will have very different situations to restart from, and the capacity of these countries and territories to finance reconstruction from government actors, private sectors will be very different from one territory to the other. That's why the discussion on financing reconstruction and transformation is so important. And in 2 weeks from now, there is going to be an important summit organized under the auspices of UN Secretary General Antonio Guterres and at the invitation of French President Emmanuel Macron, a summit called Finance in Common in the framework of the Paris Peace Forum, where AFD, French Agency for Development, has played a key role in the organization of this summit. But this summit is particularly timely because it will deal with all these issues of financing sustainable development in the times where we all at the same time are trying to exit the crisis. And it's also a very timely summit because we are in a moment where the international agenda is to some extent on hold because of the health conditions that prevent us from gathering. And so this is a really timely moment to put the focus on finance, on financing Agenda 2030 and to put and to give impetus to the political discussion globally. And the specific focus of the Finance in Common Summit is on public development banks because they have, as we say, as I said early in my introduction, public development banks have a specific role at times of crisis, but also if we look at this idea that we need not just to recover from the crisis, but transform towards reaching Agenda 2030. The public development banks have a lot of potential, and today we are discussing the fact that we particularly see a wealth of innovations and initiatives from different public development banks about how they can not only pay formally tribute to Agenda 2030 in their strategic documents, but really integrate Agenda 2030 at different levels in their operation, in their relation to the other stakeholders, in their strategies at different and operational processes. So I think this is based on that element that we want to discuss what is the magnitude of the challenge of integrating Agenda 2030 into the strategy and operations of these key players that are the public development banks. And what are the major initiatives at hand on which we could build this capacity to scale up the effort to align development banks with Agenda 2030. To discuss that, we have a panel of eminent speakers. We will have first an introduction by my colleague Maria Alejandra Riaño, who has been making an inventory, a study of the diversity of practices of public development banks in integrating Agenda 2030, or to some extent revolutionizing themselves by integrating Agenda 2030. And based on that introductory presentation, we will have two presidents or directors of the development banks who will tell about their practice. We'll first hear Rémi Rioux, and Rémi, thank you very much for having accepted this invitation. Rémi Rioux is the Director General of the French Agency for Development, and I will ask you the questions about why is Agenda 2030 so important in general and in particular for the French Agency for Development? How profound is the necessary change for public development banks to integrate Agenda 2030, and how difficult it is? So what is the margin and the room for progress? And I will ask the similar questions to Sergio Guzmão Suchodolski, who is the president of the Banco de Desenvolvimento de Minas Gerais, the development bank of Brazilian Federated State of Minas Gerais. Minas Gerais is a federated state, but if you look at the numbers of people and the GDP, it might be equivalent to many different European member states, for instance. The interesting discussion that we could, the specificity that we might want to discuss with President Suchodolski is the specific focus on subnational development banks. Even Minas Gerais is a strong economy in itself, probably. What is the specificity of being a subnational development bank? I have to say, we regret deeply that our colleague from ODI, Samantha Attridge, is not going to be able to be with us today for personal reasons. It would have been very interesting to have her analysis as a researcher at ODI on the strengths and weaknesses of public development banks in the way they integrate Agenda 2030, but that will probably leave us more space for you in the audience to ask the questions that Samantha will not have asked because she could not join us. So that was my introduction. It was already quite long, and I directly pass the word to my colleague, Maria Alejandra. Please.
Thank you, Sebastian. I will share my screen to show you some slides that will allow me to briefly explain the results of our study. I promise I won't use more than the time that you have given me, but it's important to support my presentation with these slides. Can you see my screen?
We see your screen, but not in full mode. Yes.
Okay. Good. So to start, as Sebastian was saying, public development banks around the world can certainly play a vital role in minimizing economic decline, but also in supporting recovery and financing a structural transformation. We think that success in implementing the 2030 agenda relies in harnessing the synergies across the SDGs and really adopting an integrated approach. We think that public development banks need to go beyond slightly adjusting their strategies and processes and deeply reshape their behaviors and investment practices. And in our research, we attempt to assess if and how these institutions are embracing the 2030 agenda as a driver for transformation of the economy and as a consequence, as a driver for their own transformation. Are you seeing my screen?
It's not full screen. Yes, now it is.
Is it full screen now? Okay. Good. Maybe it was because of the video. So here, first, in order to assess how public development banks are doing this, we decided on one part to review some of their financial indicators, like the granted loans in respect to their shareholders' equity, which is called the gearing ratio, to see how much these public development banks are leveraging on their own resources to provide financing. We used a sample of public development banks of different sizes and structures and reviewed 4 key moments over the last 10 years. On the other side, in the study, we assessed how banks are trying to align their practices with the 2030 agenda and the SDGs, and decided to group our findings first in the practices that they are undertaking at a strategic level, second, on the practices displayed at the operational level, and lastly, the practices that are deployed in the bank's external engagement with their clients and other stakeholders. Lastly, in the study, we argued that in order to have a stronger impact, there are certain conditions that need to accompany these efforts to really transform their behaviors and investments. Here in this slide, you find two figures that help us summarize briefly our assessment on lending. This is just a zoom of some of the banks that we included in the study, but it's to give you an idea of some of the results that we obtained with the different assessments. It is important to state here that although we are aware that public development banks have at their disposal other financial instruments, for example, like guarantees, loans are still the main instrument used by these banks, and it is also their main asset. In our sample of development banks, loans represent the 69% of their total assets. And on this part, we can highlight two important results. First, we see that there is a large heterogeneity between national development banks, some of them with loans to equity ratio close to 2, which means that for every dollar in their equity, the bank has lent $2. But we also find other banks with gearing ratio close to 6 and to 8, which means that these banks are being more ambitious and are extending loans 6 or 8 times more than their equity. This is the example, for example, of Finagro in Colombia. In average, we see that national development banks are being less conservative than multilateral development banks. Our second result in this first section of the study is that it is quite clear that this indicator of loans, gearing ratio, and equity has not improved substantially during the last decade, as we can see in the second figure of the slide. Once the values registered in 2009 and 2019 are compared, just some banks have really improved the loans disbursed in relation to their shareholders' capital. A remarkable percentage of them have reduced or kept unchanged this ratio and still remain at very conservative levels. As main takeaways from this first part, we see that in order to achieve a greater impact, it is important for these banks to expand their lending capacities through being less conservative, through making use, as we said, of other financial instruments at their disposal. And sometimes it is important for them to also have capital injections where needed. But this also has to come in hand with real transformation in behaviors and investment practices, and is what we assessed in the second part of the study. Now we move on to the core of our study, which is based on very interesting discussions and revision of reports from public development banks of different geographies, sizes, and business models. In general terms, we consider that most public development banks have the interest and willingness to mainstream SDG priorities into their strategies and operations. We identified innovative practices that are a very good basis to generate fruitful discussions among public development banks. For instance, on structuring SDG pipelines, DBSA, that is National Development Bank for South Africa, has created a project preparation fund where they seek to provide a strong support at early stages of project preparation, and in this sense ensure that they will have in the end more bankable projects that they could finance. Another example is NAFIN in Mexico, who is employing recoverable grants or grants that are convertible to loans to help a project or a program find their balance between achieving its bankability and ensuring sustainability. Or for example, KfW, which is, as you know, one of the biggest bilateral development banks together with AFD, it's very interesting as well because besides having a new mission statement that incorporates SDGs, business is managed on the basis of key mega trends, and this is also aligned with the German Sustainable Development Strategy and thus with the core messages of the 2030 Agenda. Together with this, KfW has also recently elaborated mapping methodology with the aim of creating transparency regarding KfW's annual contributions to the SDGs. But nonetheless, most reviewed banks are in what we could call an initial stage or an initial phase of alignment, where we see that they have either taken the decision to modify their strategies and link them with certain SDGs, or we see at the operational level that they are interested in using social and environmental safeguards as preconditions to approve their credit or their loans. But we think that these approaches, in a sense, still reinforce decision-making in thematic silos. We also see that actions are still scattered and are not really systematized at the portfolio level as a whole, and therefore we think this might make that actions lose forcefulness, and they also lose visibility of its possible impact. As we said at the beginning, it is key to place a stronger focus on understanding the interlinkages between the goals and the targets to really take advantage of the synergies that we can find among them. And this integrated approach should be permeated in all actions and processes of public development banks. We think that banks need to widen their scope of analysis to the portfolio scale. And one of the key challenges is not just to develop a pipeline of good individual projects, but to try to develop a comprehensive portfolio, a portfolio with an SDG lens that aims at reallocating capital flows towards critical sustainable development priorities. As a second recommendation, SDG considerations should be present within the whole investment and project cycle by having in place, for example, systemic ex-ante screening and exclusion sustainable development criteria, or ex-post evaluation mechanisms that favor a report based on SDG impact and which are able to measure how much different flows actually contribute to sustainable development. And well, this all has to be supported by strong incentives for employees to feel encouraged to apply this new vision into their daily operations, and together with capacity building that helps them understand, as we said, the synergies and interactions and the trade-offs that might be present when trying to design projects that are going to be implemented in a particular territory. On the other hand, we also see that on their external engagements, alignment efforts are permeating and defining how public development banks relate and engage with their beneficiaries and other stakeholders. We found here very interesting practices of banks that are well aware of the importance to drive change in the territories where they operate, and work side by side with other stakeholders and private financial actors. The example of COFIDE in Peru or the FMO in the Netherlands, to name some banks of the ones that you can find in the study, are very interesting. We see that both banks are working hard to have a more permanent dialogue with their clients and end beneficiaries before and during the lifetime of their investments to understand the sustainability challenges of the territory, to understand the communities that they should support and to be able to provide better guidance on project preparation and implementation. Here, of course, the example of BDMG and AFD with their new SDG bond frameworks are very interesting as well, but I am sure that we will hear more about this from Remy and Sergio after my presentation. As food for thought on these findings, we see that public development banks need to embrace and take real ownership on their roles as enablers and catalyzers of sustainable finance. We see that there is a big window of opportunity to have an impact not only through their financing tools, but also making use of their non-financial services, such as capacity building or acting as bridges between public institutions and private entities, just to name two examples. I think also that there is a lot to learn between public development banks as peers, but now we see that approaches on how to start alignment within the banks are so diverse that it would be important to dedicate more efforts to harmonize concepts and methodologies that they are currently using. We see that the summit of Financing Common and the different events as the technical conference that will take place next week can be a good opportunity to start this close dialogue between public development banks of different geographies and business models. In general, it's clear that banks need to count with the support of other actors to really be agents of change in their territories. Governments need to provide policy frameworks that are clear in terms of sustainable development priorities of their countries. And we think that there should be tailor-made regulations for public development banks to really encourage them and enable them to drive sustainable development transformations on the ground. We also think that other financial actors, such as credit rating agencies, can be enablers of sustainable development financing. Most of the times we saw in our different interviews and research that public development banks sometimes feel constrained about being more ambitious because of the credit rating that they might have, and they don't want to endanger this rating. So we thought maybe of thinking about an SDG credit score that could encourage and incentivize public development banks to be more ambitious and invest in non-traditional sectors or in more fragile settings, and allow them to be more impactful and transformational on the ground with their investments. And lastly, this is just, as I said at the beginning, a very brief an overview of the study, which has so many much more details about the different practices and challenges and conditions for success for public development banks to really scale up and transform sustainable development on the ground. And I invite you to check out our study that was just published today to see the other examples and interesting practices that we highlight in the study. Thank you.
Thank you very much, Maria Alejandra. I just invite also all the participants to have a look at the very interesting program of the Visible Hand Research Conference that is going to take place ahead of the Financing Commons Summit, where a lot of other researchers have also interesting studies, among which the one that you have presented. So that's on 9th and 10th of November, and you can find the program on the Visible Hand. We might put that in the chat for you to have a look at. Cher Rémi, as a director of HSBC for Development, I know that this issue of Agenda 2030 has been one of the priorities for you to see how to make that a reality in your public development bank. How do you receive the assessment that has been, or the inventory that Maria Alejandra has been presenting, and how do you see the challenges for IFD?
Thank you, Sébastien, and thanks to IDDRI for this this webinar and all the support and contribution. Yes, for the Visible Hand conference next week. No, 2 weeks from now. Eager to be there. Good to see Sergio. BDMG and AFD are very close partners for a long time now, and well, we will listen to your experience, which is so interesting. And thanks to Maria Alejandra for this very interesting study. One study, there will be others, about 20 papers to be published at this Visible Hand conference from prominent academics. And that's, I think, on behalf of all CEOs of public development banks, we are very grateful for that. Because we felt for a long time that somehow we had been forgotten in the debate, in the discussion, and it looked like a paradox because we were working a lot, and the crisis, of course, is only reinforcing that. Maybe not devoting enough time for promotion, self-promotion, but we felt that we had something to share with colleagues all around the world, and to build together and to interact with other players in the financial sector. But probably for that, we were still a bit too fragmented between the various types of public development banks. The only thing to say we are public development banks is significant, because there are many concepts, names to qualify. Sometimes we say DFIs, or sometimes we say they are multilateral, national, regional, or they are banks for SMEs or promotional banks. So this somehow it was unclear. And if we keep the PDB language, probably it's a way to say that we form one and single community, of course, with different capacities and missions and mandates. But at the time, we should have a voice, a stronger voice in the discussion, and it's in your report. I would say that beyond the friendship between all of us, what we share between public development banks is, I think there's a very strong consensus behind climate and development. And this consensus was framed 5 years ago, in 2015. It's Addis, New York, and Paris, and this is our mandate. This is the thread that makes us all together. And so your report is only reinforcing that. And two messages. I think there's an idea of quantity in your report, which is very interesting. So you studied 30 PDBs for about $500 billion, which is already something. When the club I'm chairing, the IDFC, we are 26, but we are $800 billion. And you will see the 9th of November, when we will publish the first ever comprehensive database of all public development banks in the world, built with University of Peking. We found 452 and then we closed the list, and it amounts to $2.3 trillion financing a year, meaning 10% of all investments, public and private, each year. And probably in 2020, because of the counter-cyclical role of these institutions, it's way more. We don't know the figures, but for instance, multilateral development banks, they doubled somehow their financing, and probably IDFC has done something similar. We are checking the figures, and we see a lot of activity in each and every of our institutions. And the second point on quantity is your conclusion on, I would say, how conservative these institutions are, meaning the gearing, the loan-to-equity ratio could probably be increased, and so unlock a potential that is already there and that can only be mobilized, reinforced by our shareholders and the stakeholders. So that's for quantity. And of course, the other dimension explored in your report is quality. And on this, so I'll come at a later stage on AFD experience. But of course, public development banks, I would say, are sensors. I mean, they know because of the projects they are accompanying, they know climate and social. I mean, they have to reconcile it in each and every project they are accompanying. This is, I mean, the teams at BDMG or AFD. I mean, these are questions they are asking themselves all day long. For I would say for a long time, forever. Another question, because of SDGs, is to elevate it at a strategic level for our institutions, and of course to invent the accountability mechanisms to demonstrate that we are aligned. And what your report establishes, of course, is that we are still at very early stage. Of course, we are at the stage of mapping. I would say we try to assign projects to specific SDGs, which is one step. But of course, we have to go further and go from mapping to alignment, meaning verifying if our projects are consistent with several SDGs and even SDGs as a global framework. We need to verify. So this is the mystery we're at the doorstep of, but be sure that all of us, we are right now in the process of searching for solutions to provide better investments. And yes, this is something, I stop here, but this is something we will discuss at length at the Finance in Common Summit. So please register this week, or it will be closed. It's on the website, and there will be about 20 events to give details and explain on what SDGs concretely mean. Maybe I stop here for the first question.
Thank you very much, Rémi. President Suchodolski from the Bank of Development of Minas Gerais, how do you see, why did you invest so much energy in your organization to align your organization with Agenda 2030? Am I mistaken to say that you want to make your bank the bank of SDGs? And if it's the case, why that, and how do you make that?
Thank you, Sebastian. Indeed, we would very much like to make BDMG the SDG bank in Brazil, and I think we are on that path. First of all, I'd like to say good afternoon. I'm speaking from Belo Horizonte, the capital of our good state of Minas Gerais. It's a great pleasure to be here with you today, and I'd like to say special thanks to our friend and good partner, Hemi Hiu, who's also an international leader, the head of the IDFC club, and is being really building and integrating the global community of public development banks. I was hoping to come and visit you for the Financing Common, but due to the change in circumstances, we will be a partner and we will be participating remotely. And Remy is a bit unfortunate because I had a little gift for you, which is a tombstone of our partnership, but I hope to deliver in person in coming months. In any ways, I also special thanks to our moderator, to Sebastian, and to the whole of IDDRI team. They've been great partners. We've received a delegation from IDDRI just a little while ago, and we've been successfully working together in this difficult times. Through this partnership, we have just published a joint article about the role of subnational development banks, co-authored by our presenter, Maria Alejandra Riaño, who is a great opportunity to meet you kind of almost in person, who has just made this great presentation we just watched. And finally, would like to thank our audience. I recognize a few friends who have sent WhatsApp messages from several different development banks around Brazil and Latin America. Anyway, to your point, given the magnitude of our current economic, environmental, and human crisis, and the need for effective response measures, I believe that public development banks are definitely on the spot again. And I think Remy is very right to say that we do need to do some promotion and show our work and kind of turn the page and present the value of what the 21st century development bank model is or are, in the sense that there is a lot of diversity in the ways and means and programs that we operate. And of course, an event like this one is a crucial forum to present and debate, to understand better the challenges and opportunities ahead. The study presented today is a very important contribution to the ongoing efforts to better alignment of development institutions with the 2030 agenda. We urgently need, of course, to enhance resource mobilization to effectively implement the targets over the next decade. We are 5 years into the 2030 agenda. We now have 10 years to accelerate the implementation. I believe that the study correctly points that public development banks need to take ownership and leadership in their roles of enablers and catalyzers of sustainable finance, working side by side with a larger pool of stakeholders in strategic partnerships. In this sense, I like to call the attention for the need to look at the territorial dimension of SDGs and consequentially emphasize the role of institutions that are working closely with the ground. And there, you know, of course, with relevant contribution from subnational development banks such as BDMG, but not only BDMG. Maria Alejandra comes from Colombia, and there are several examples in Colombia, including IDEA, which is a great partner of ours, a member of IDDRI, and I had the honor to receive the former president last year here in Belo Horizonte when we hosted the first meeting of chief economists from Latin American development banks. I've been serving as president of BDMG for now 1.5 years, and I would like to deepen a little bit my comments regarding the subnational development banks, which I will refer to as SDBs, so that we create a new acronym for our good banks. A recent study published by OECD estimated that 65% of the 169 targets underlying the 17 SDGs will not be reached without proper engagement and coordination with local and regional governments. So, subnational development banks became key drivers of local sustainable development since they are closer to the needs and challenges faced by local actors with whom they directly interact. They are usually able to identify local priorities and reorient their strategies to meet the needs and peculiarities of their regions. More importantly, and this is the core of my argument, by working in partnerships with larger national and multilateral institutions, they contribute to better channeling the global financial and technical resources available to promote local impact. In practice, they actually act as bridges between two different worlds. On one side, we have the governance and operational complex requirements from international lenders. In the other, the local environment, which requires practical and pragmatic approaches that are appropriate to their realities. By doing so, subnational development banks can extend the reach and effectiveness of development networks by serving as last-mile specialists, identifying opportunities and connecting local actors to global funds geared toward sustainable development. Here at BDMG, we are working in close cooperations with institutions like the Inter-American Development Bank, l'Agence Française de Développement, the European Investment Bank, CAF, Fomplata, and many others to gradually and consistently align our strategy and operations with the 2030 agenda. We have been increasing the availability of credit for initiatives related to clean energy, public health, innovation, and infrastructure, in addition to expanding specific programs and lines for valuing female entrepreneurships and working capital for small micro enterprises, SMEs. In 2020, the total amount of the bank's loan disbursement increased by 162%. So more than doubled the amount disbursed until September. And I'm happy to present with a very interesting number. More than 51% of them fully aligned with SDG goals until September. Now, I have the figure for October, and we already reached 76% alignment with the SDGs. So definitely, we are following the recommendation of the Secretary General of the UN, and we're definitely providing a response in counter-cyclical programs that are fully aligned with the SDGs. So, but we're not only providing credit. We've been active players in project preparation phases of key infrastructure investments at the municipal and state levels. We are working in a project preparation facility that will enhance the quality and scalability of sustainable infrastructure investments through effective public-private partnerships. Both the expansion of lending capacity and the active role in project preparation activities are pretty much in line with important recommendations from the study presented. The bank has also recently published its first sustainability bonds framework, a process by which resources will be tracked, allocated, and managed aligned with the SDGs. The framework includes categories of social environmental projects that intend to be in line with 13 of the 17 SDGs and 28 of the 169 targets. The document also provides clear guidance on eligibility criteria for sustainable and social impacts, exclusion of sectors, and negative impacts and indications for impact reports. And it's fully available on our website, which is bdmg.mg.gov.br. The launching of the framework is a key step for the issue of a sustainable bond in the near future, which will be the first operation of its kind among Brazilian development institutions. Looking ahead, I believe that institutions that are working closer to the ground will face a particular set of challenges to meet their full development potential. First, they should be better prepared to work with new and more diversified pool of funding sources, with emphasis on multilateral and bonds linked to SDGs, and also our partnerships with development agencies such as Agence Française de Développement. This might have deep implications for the development of internal specialization and new practices for monitoring and measuring impact. Secondly, as I mentioned before, they must expand their SDG-related loan portfolio and technical services, sustained by a significant increase in the volume of disbursements and increase in operational efficiency, which is very much in line with the presentation and the report from IDDRI that is co-authored by Maria Alejandra. This expansion will demand the incorporation of new technologies that will reshape what we do and how we do our business. Finally, it is imperative to combine their development mandate with long-term financial sustainability with an adequate level of profitability derived from a diverse base of revenue sources, more efficient guarantee instruments, and cost-effective programs. I would finally make a very important remark, which I fully agree, and I had taken note. I did not understand fully when I first read the report, but now after the presentation from Maria Alejandra, it's very clear to me, and I fully agree, which is the rating agencies, they must change their methodologies, each of them, especially the three major ones, Fitch, Moody's, and S&P. Especially S&P has done a major review a year and a half ago or 2 years ago, and they did some calls with the development banks around the world. I really urge them to review their methodologies so as to incorporate, especially the supranational teams, and this will probably have a cascade effect on the national and subnational way they evaluate development banks, so as to not to punish the development banks that are actually fulfilling their mandate in doing their job. So in order to keep this introductory comment within the scheduled time frame, I'll stop here. But I'm happy to continue to participate in the debates. Thank you very much.
Thank you very much, Sergio and Remy and Maria Alejandra, for these really interesting discussions already of the elements of the study, and also putting the emphasis on what you do at BDMG and at AFD. I just want to really make explicit for the participants that they can really interact with the speakers, but they need for that to write down their questions in the Q&A box. And I have a first question that I think is very important for us to make it also a little bit more concrete for people who are not in your shoes, who are not in your banks. One of the questions that just appeared was one that I wanted to ask you. When we think of alignment, the first thing that we know about is aligning with climate objectives, because that's a key element where we see that we need that people, I mean companies, but also banks like yours, public banks, need to change to ensure that they don't have a negative impact on climate, but that they have a positive impact on climate. And the question from the audience is that we see that green finance taxonomies are one of the key elements of alignment with SDGs, but they actually do not take into account a series of the other SDGs that are not climate related, and even for other environment objectives, they might not take into account well those elements. And that's particularly crucial at times of a recovery where all societies and governments are going to look at jobs and inequalities as one of the key elements of what they need to reach as an objective. So why do you see that the majority of the questions of alignment that public development banks can tackle are actually the first step, that is climate alignment? Do you see that as a necessary first step? Do you see a dynamics where once you're aligned on climate, you can go to alignment with SDGs, or do you think we need to completely rethink the way alignment is taken through the green taxonomies to make it larger and directly jump onto alignment with Agenda 2030? Maybe Remy, I would ask you the questions first.
I can only share the AFD and IDFC experience. Yes, our journey comes from climate to SDGs, clearly. We learned a lot for 15 years now, exploring what climate finance means. So we started by measuring the carbon footprint of projects. That was a decade ago, 15 years ago. Then we set targets for climate co-benefit and progressively increased it to reach 50% of our financing each year. Then we said, what about biodiversity? So, you know, we commit to provide 30% of our climate finance that is nature-based. So linking climate finance and biodiversity finance. So we add somehow another SDG to SDG 13. And then, of course, we ask ourselves, but what about the 50 other percent? I mean, are we free to finance coal or whatever with the rest? And of course, the answer was not. And we remembered that Article 2.1c of the Paris Agreement was about development pathways. So we said we will align 100% of our financing with the Paris Agreement. And of course, immediately came, it was at the time of the yellow jackets in France, so that was easier to understand. Immediately came the social issue. So we added, we will be 100% Paris Agreement, and 100% we phrased it a social link. So to verify that each and every project has a positive contribution, or at least do not harm on both dimensions. And then it gave a new meaning to a procedure we had internally that was somehow, I remember, imposed to us by someone you may know called Pascal Canfin, who was a minister at that time. So he asked AFD in 2013 to develop an internal independent opinion. So we have a special team that is distinct from operations, that is examining projects, all of them. Well, nearly all of them, but we are close to, and it's some sort of filter, and so they are putting grades on projects on 6 dimensions of a sustainable development framework, and of course we eliminate those that are not at the level of quality required, and we are pushing the ambition through a dialogue with the teams on the other. Maybe interesting for you, of course, we were the first public issuer of a climate bond in France, 2014, and last week, we were the first issuer of a sustainable bond in France. And maybe you've seen the framework is based on this opinion, this internal opinion. We said that we will put in front of the resources. We will mobilize a pot of projects that have the best grades after passing this filter. And in the end, of course, we know that the idea is not about aligning projects. The idea and the end goal is about aligning institutions. I think in the end, BDMG or AFD, we should be financed 100% with sustainable bonds. And the market should reward us for that. We should mobilize resources at a way cheaper rate because of the quality of the financing we are producing. And if so, of course, we will have traction on other financial institutions, public and private, that could adopt or, well, simple methodology as the one we developed at AFD, or another one, I mean, and a methodology that could become a standard for the market. And we are not so far from that. And I see some sort of acceleration here. And of course, we are discussing it. We have the same journey within IDFC. So we have this climate mapping for years now, and we will publish by the Finance in Common Summit a report, the first one on SDG alignment, seen from the IDFC members, and of course compare with all other experiences like that of IDDRI and that of BDMG. And I was this morning at the annual meeting of ATFIAP in Asia. I mean, that's the talk of the family, all that.
Just Rémi, the IDDRI and ATFIAP, I understand, are the regional associations of development banks in IDDRI for Latin America and ATFIAP for Asia. But I had a quite technical question on exactly on what, before letting Sergio answer, I had a question for you from the audience, very specific, and I think it's important for people to understand. So the question is the following. If we follow you, the opinion on alignment with sustainable development comes as a filter. And the question is, how far are you from making it also integrating SDGs in project preparation and not just as a filter to select the projects?
No, of course, sorry, I forgot to mention that this is an ex-ante filter. So it comes before the project is submitted to our board. And of course, it's part of an internal dialogue between the team pushing for the project and those that are having a say on its quality. And so there are interactions so that the project can pass the filter. And so it's, I think it's virtuous because it pushes the ambition internally. But your question is very right, is now that we have an ex-ante process, we have to go all the way down to evaluation and to have some sort of, I would say, a spine, accountability spine from origination to impact. And to be frank with you, we are not there yet. We have all the elements, but it's not yet, we have the vertebrae, but it's not yet built as a spine. And we are working very hard on this internally, to be able, of course, to be accountable to the impacts and not only to the intentions.
Thank you very much, Rémi. So the same questions for you, Sergio. How do you look at individual SDGs like the environmental ones as the first step towards aligning first with the transformation towards reaching decarbonization, for instance, and then the SDGs? I understand it's not exactly the path yet that you have made, but there is a specific question in the audience for you, and I think it's related to that question. You mentioned that you had projects aligned with 13 SDGs. So what about the 4 others SDGs? Is it that you're not aligned with them? Which ones are they? Or is that a problem that you're not aligned with the 4 others? So how would you discuss in detail or more generically the idea that it's complicated to be aligned with the whole of the 17? So how do you select the ones with whom you try to be aligned jointly?
Thank you, Sebastian. Not at all. We're not leaving the 4 of them outside, and we actually are aligned with the 17 and the 169 targets. We just believe that, as I think Rémi well put it, and we were together in several milestones, I think, of this path that we are undergoing together, and it's not over. There are a lot of lessons learned. I think the taxonomy is a very interesting challenge. We see a lot of diversity of taxonomies and methodologies that have been developed in different parts of the world. And some of them very interesting. Just to reference one of them and make a link with the report presented today, there is a reference in the report that PDB's actions need to be upheld by a clear SDG national policy and budget. But one of the most interesting experiences that I have seen, and it's already in place, is a subnational budget from one of the Indian states, the Assam state, which is one of the poorer states within India. They've been working with the UNDP for several years, and they actually developed a full-fledged budget that is aligned with SDGs. It's on subnational development level, but it's very effective, and they've been doing the exercise, I believe, for over 3 years now. Coming back to the core of the question, we also started our path in the climate side. We actually, BDMG is a member of the initiative, the Mainstreaming Climate Finance, which was very still in place and very important at the time of the One Planet Summit. And we also have in place a carbon calculator. We are members of the UN Global Compact. But referring to the 17 SDGs, what we're trying to do in aligning with 13, rather in not aligning with 13, referencing 13 rather than 17, is that I believe is more credible that we report on the ones that we have a higher impact, the ones that our projects are contributing in a more profound manner, rather than trying to say we contribute to all of them and almost like try to be like an A student and lose focus. I think the question here, and it's related to how it will evolve the methodologies, and I would say even technology. Okay, I think we should reference is not only about approval of projects and having an ex-ante framework to prioritize or to serve as a filter, but also the ex post so that we monitor and evaluate. But I think we are on the path, and in project preparation, there is a great opportunity to actually integrate the SDGs from SDG development impact, but even from engineering technology. Okay, so just to give you an example, we are doing project preparation for roads concessions, the concessions of roads here in Brazil. So to be able to deliver them to the private sector, and we have the mandate to structure a very important segment here in Minas Gerais, over 300 kilometers that traverses the metropolitan area. We will integrate SDGs into the project preparation so that the engineering company, when they do the EPC work, and the concessionaire, when he receives the company, they will have to move on with these concepts. And there are interesting features, which is integrating engineer parts of the road, like using used tires in the asphalt component, using renewable energy for the lightening of the roads, just to mention like very concrete examples among other things. And I think this will change the way that development banks will work, and will have a leadership in this process of really transitioning our economy as a whole to a more sustainable economy. So I believe that we are in a different stage and era of public development banks, where we will work very closely and not replace the private sector, but we will be the ones leading in terms of the patterns, in terms of higher risks, and we need to take account of that and integrate in the methodologies, in technology, in engineering, beyond monitoring and evaluation.
I just wanted to, I see in the chat a lot of questions that show that there are nearly 100 participants in the audience, and they are very interested in technical. approaches. How do you make that happen, that you can align with the Agenda 2030? And I will name some, because I think it's interesting. You don't need to maybe answer all of them, but I think it's interesting to see that this is of interest for many of the people in the audience to really understand how actually can you make that function. But I also want after that to come back to what you've been just both saying, that there is an idea of embarking the rest of the economy and the rest of the financial sector and the rest of the public development banks behind the champions. I don't want to name you the champions, but say that there are innovators in the field of PDBs, and how do you make sure that you embark the rest of them? That is, I just leave it to be sure that we have time to discuss that very important question. But I will name a few technical questions that I think are very important. One question is, for instance, how do you make sure that you are anticipating the effect of your investments on local communities and indigenous people? That might be related a lot to the ESG, to the environment, social, and governance safeguards that are something that is the principles of Equator, but maybe there is something new about Agenda 2030 and the way that you can deal with local communities and indigenous people. Another question is, for instance, when you end up having a trade-off between SDGs, how do you deal with projects that are good on one thing but bad on the other? How because that's the key element of discussions about alignment, that at some point it's difficult to have win-win-win-win-win solutions on 17 goals. How do you deal with the fact that sometimes you might end up having a choice or an arbitrage to be made when there is a trade-off? And the last question that is, I mean, all these questions are technical in their wording, but of course of political significance. And the last one is about SDG 8 on employment, which is going to be key for recovery in many regions. How do you make sure that quality job creation is one of the evaluation that you can have in your assessments, because that's one of the key targets of SDG 8. So this is a wealth of very technical questions that go to the heart of what it means to really be aligned. I don't know if you can answer them, but I think it would be good to see if you want to react to the types of questions that you see emerging from the audience. Maybe Sergio first, and then Remy.
Okay, I'm happy to tackle first. I think there are a lot of questions that are related to different incentives, right? One of the incentives that led us to really deepen and accelerate our work was related to some of the partnerships, including with one of the first ones with the IFD, with the French Development Agency back in 2013-14, when we started the first project to clean the major lake here, which is kind of a postcard of our city, and also in the bus rapid transport, the clean bus rapid transport of our capital city of Belo Horizonte. So the use of proceeds was very much linked to the design of the project, which is the SDGs were not yet there during that time, but definitely looking back to the project is completely aligned with the SDGs, even without the methodology. Of course, once you are managing the environment, you will have some negative impacts, and I think the challenge here is to enhance the positive impacts so that they will be able to render the negative impacts and mitigate their impacts, and have a much higher proportion of contribution to the positive impacts. But managing any kind of infrastructure, you necessarily have some kind of impact. And I think our challenge, and it has to do with technology actually, is to little by little we have much lesser negative impact, and we at least neutralize. I think this is what SDG is all about, and Remy was referencing to the concept of do no harm. But if possible, we go beyond do no harm and actually start having positive impacts, where you are able to do things like rewild some of areas that have suffered with deforestation and you know, a long period of deforestation. And we've been doing that. We've been financing parks here and doing reforestation projects in Minas Gerais, and some of them even regenerating water sources that had been dried for many years. So it's very interesting. And we also been involved in two major disasters relating to the mining sector. One affected the Sweet River, the Rio Doce, and it took place 5 years ago, and it affected 35 municipalities. And we are working with the foundation that was created by the two multinational mining companies that had a joint venture and were at the heart of the tragedy, to restore and actually produce reinvestments and financing of SMEs that are aligned with the SDGs. And in this sense, we need to interact with local communities, including indigenous communities that are present in these 35 municipalities in Minas Gerais. So I think this is really part of our work. The state of Minas Gerais is not located in the Amazon region, which is now of great interest and debate, but we do have large forest reserves and very important wild reserves and indigenous communities here, which we are completely involved. And last but not least, I mean, regarding the employment quality, I think it's very important. I mean, we are at a time of technology disruption, and indeed, people are losing their jobs, especially the ones that are less qualified, that can be replaced by technology and by new automated substitutes. And on the other side, we do want to enhance the quality of employment. So I do believe that we need to work on the education side urgently. And for that, we are partnering with trade associations, private partners, and of course, we are our state shareholder is the state of Minas Gerais. We're working with all the secretaries on the state level here to treat, especially because we have many differences inside Minas Gerais. We are a little bit larger than France in territory, so different regions of Minas Gerais are at different stages of development. There are richer regions and ones that is even accounting for their ecosystems. We have a semi-arid part of the state. This is a very relevant question, so as we leave no one behind in this new world that we operate. And technology definitely plays a very large and important role in bringing this new generation and providing access to quality employments for them. Let me stop here. I know Remy has much more to contribute on a global experience of French Development Agency.
Thank you very much, Sergio. I will also make some space for Maria Alejandra because she probably has observed also practices that are interesting on that part. But Remy, please.
Yes. I start by answering, there's a question about the linkages between SDG financing and the wider debate on measuring of ODA fluxes. I would not say it's a wider debate because, of course, ODA is only $150 billion a year, you know. Of course, very, very precious because highly concessional. But what we are talking about today is about the alignment of PDB's public development banks financing, so $2.3 trillion, and what in their capacity to reorient all flows somehow as rapidly as possible, meaning 20 trillion a year. And so the question is, how do we use ODA to leverage and to incentivize public development banks to have traction on private flows. That's how I see, I would say, the wider debate. On the other issues, decent job, indigenous people and local communities, I would say that's a classic issue of safeguards, and so of course you are talking about the criterias that constitute the filter I was referring to, and of course we put in the filter the best common standards approved at the international level. The question afterwards, the question on are we weighting an SDGs against the others is more interesting, because it comes not only on the criteria but on the way you combine and you provide a rating of the projects. And my answer, but there can be others, but my answer on what we are doing at AFD, no, we are not weighting SDGs against one another. And for a very good reason, which Sergio gave in his preliminary remarks, which is SDGs is an attempt to go beyond successive priorities in development finance. We tried and we made errors with that. So SDGs deeply is about turning to territorial challenges and try to identify what are the key issues to unlock development, and SDGs are also to turn on the demand side. So I would say that an institution like AFD, we do not have to choose the priority. We have to take from science, from what local authorities are expressing of their needs, and then verify that the way we tackle, the way we address these will provide, yes, a positive contribution on as many SDGs as possible, and will not harm on the other dimensions. And you know, when you in this opinion, most of the time it's really a tension between 1, 2, or 3 SDGs that you have to go into for an in-depth analysis to be sure of what you are doing. It's about housing and energy efficiency. It's about public transportation and inequalities. These trade-offs you have to explore, and of course the beauty of it is that it pushes our internal departments, the one on urban transportation and the one on social issues, to work together and to find a solution, exploring these nexuses between 2 SDGs. And one last remark, which is also part of the mystery, but I'm attached to, is how to say that when we will have this accountability spine, I mean, when we will be strong enough to verify from origination to evaluation that we are doing our business very, very, very seriously, then we will be able to take more risk. We will be able to take a weaker counterparts, and verify that they went from point A to point B at the end of the project, when our institutions most of the time are putting all their resources up front, and in the end we are financing people that are already perfect. So yeah, I'm a bit caricatural, but because we are not completely sure of what we are doing from the start to the end of the implementation of the project. So we have to turn from the photograph to the movie, and somehow it's the same with the countries, because SDGs also means development trajectories. And we all know that our projects are only valuable if they help define the right policies and the right trajectories. I mean, they're only proofs of concept that the transition and the SDGs in the end, and Agenda 2030 and carbon neutrality by 2050 is possible. So all this is encapsulated and captured in these technical issues, actually.
Thank you very much, Rémi. I will leave the floor for Maria Alejandra, and then I will come back to you two for your final words. Sorry, Maria Alejandra, I just want Sergio and Rémi to be able to prepare. I think one of the key questions that remain from the audience is what do you need to be able to embark the rest of the PDB, of the public development banks? That's a key question, because not all are as advanced as you are in this thinking. And how do you also embark the rest of the private sector? So what do you need? What are the main levers or challenges that you are facing to be able to embark and make these innovations that you have presented something that commands more, that becomes mainstream in the rest of the financial sector and in the real economy? Maria Alejandra, what have you observed that would be interesting examples to answer the questions that we've just discussed with Rémi and Sergio?
Thank you. I think that the questions that were asked match perfectly with some of the findings that we have in the study, mainly on the need for public development banks to focus more on early stage project preparation and on a constant and more closer dialogue with the end beneficiaries that they are going to support. This happens mostly with national development banks and first-tier public development banks. Sometimes, for example, with second-tier public development banks that work through financial private intermediaries, this strong linkage and knowledge of the communities and the end beneficiaries that they are supposed to finance and support is lost. So one key recommendation would be that despite being first-tier bank or second-tier bank, the priority should be to be more close and more engaged at the early stage of a project definition to be able to support these communities to come up with projects that in the end would be bankable and that will be able to apply for the needed financial support. We see some good examples on this. As I mentioned, COFIDE in Peru is working very hard to do community reunions, to get to the local terrain and get to know which are the challenges that these communities face. Or, for example, Banco Nación in Argentina, who has in place 80 workers specialized on agroforestry that go also to the ground to monitor and assess the intermediate results of their projects, and this allows them to feedback their strategy and build stronger SDG pipelines. So that on a way, and on another way around the question of quality of jobs, I think it's important for public development banks to go beyond the financial indicators on the reports. Sometimes we see they're focusing a lot on financial, of course, because they are banks as well. So they need to report on their financial flows, but it would be interesting as well to think about more qualitative type of indicators that make more visible the impact, the qualitative impact that they are having with their investments, which they do, but sometimes this is not visible enough because they don't have indicators or some type of measurements that allow them to reflect this on their reports. This would be like my two big remarks regarding the questions that were asked.
Thank you, Maria Alejandra. In the few minutes that we have left of your time, Sergio and Remy, maybe I turn first to Sergio. How do you see this challenge of getting from innovators and champions, pioneers in this field of alignment with Agenda 2030 to something that goes more mainstream? In your field of public development banks, there are some development banks that are not aligned, whose portfolio is really far from being aligned with decarbonization and with SDGs in general. How do you see the capacity to embark them towards more ambition in aligning with 2030? And beyond PDBs, public development banks, what other parts of the economy, how do you embark them? What do you need to embark them?
Great. Well, first I just want to show Maria Alejandra our sustainability report, fully aligned with the SDGs. This is the 2019. We'll send you a copy, and we will send also Remy a copy, and also the 2020 that it's in the making. Listen, this question is a very interesting question, especially taking account of the Development Bank Association. I'm the president of the Development Bank Association of Brazil. We have 31 different development institutions. Actually, we are 4 development banks in Brazil, the national one, and then 3 regional development banks. Then we have 17 development agencies in Brazil, and we have some credit cooperatives and a few commercial banks that have a development bank portfolio. Amongst them, a very large one, which is Banco do Brasil, one of the largest commercial banks in Brazil. They are all members of the association, and this was one of the big challenges that I found when I took office as president in last August. I've been the vice president. I was the vice president prior to that, which is how do you, especially the smaller ones, how do you accelerate and bring them to the level of the ones that are in the vanguard of the SDG alignment? So what we do, we started doing a lot of workshops and showing them some of the incentives. We also signed agreements on very concrete agreements involving specific agendas, technical cooperation, but other incentives, including access to special funding with the French development agencies, with the Inter-American Development Bank, with UNDP more recently, and others. And I think once you start sharing this experience, and we do the same at IDDRI. I'm on the board of the Latin American Development Association. We had the General Assembly, the annual General Assembly we hosted at BDMG virtually last month. Remy was the keynote speaker, and it's a great way to share practices. And to be honest, even myself, I was very impressed with some peers, even smaller banks from Mexico. Mexico has a development bank focused in agriculture that has worked with the Inter-American Development Bank, with the French Development Agency, and they've been issuing for 3 years in a row on a very large scale. I mean, more than $100 million each year. They've been issuing first green bonds and now sustainable bonds. So I think these concrete experiences, which are scalable, right? I mean, they are using these proceeds. There's verification on the use of proceeds, and they can even be penalized if they don't do it correctly. And they are channeling for family and small holders in farming in Mexico. And I think it's a great example. And we see all kinds of similar examples throughout Latin America. Some are a little bit behind, some are sort of in the middle of the road, some are really doing some innovative implementation. But the most important is that we collaborate. It's not a race to see who's the champion, who's going to do it first. Of course, we all want to see innovation, but it's one planet, right? As far as I know, we cannot move to another address, at least not now. They say maybe Mars in a few decades, but it seems that we are stuck here. We are neighboring states. We are in the same planet. So there is a lot of incentives to collaborate, and that's SDG 17. right? That's what we do. That's why we are actively responding to the invitation we received from Remy and AFD to participate in the Financing Common, which is in a way is also not only the first global meeting of public development banks, but it's also a key milestone for Glasgow, for COP26. We were in Madrid last year. We were at the One Planet Summit. We were in Paris before that. So these are agendas that we need to work together and also bring the knowledge from the field. And I see our role as a subnational development bank, what has worked, what kind of new innovative things that we can scale up. And that's why we do a lot of exchanges with different banks. We just signed an MOU with DBSA from South Africa. And we are sharing our digital platform that we've been working, especially during the crisis, to mobilize resources, working capital for SMEs. And we're sharing with them. They're a larger institution. And of course, we want to learn from their experience, for instance, operating with the Green Climate Fund, which we have not done yet here. We've interacted, but we have not started working, just to provide one concrete example. So I think this is a great way, and platform and virtual technology is helping us to really bridge the gap and do this in a very effective way. So that's how I see the leadership of the banks, and also bringing the private sector. We don't need to do 100% of the financing, but maybe we can do the first loss portion of it. Maybe we can get involved so that other investors will see that we have skin in the game and will be willing to join us. I think there are many ways in which we can collaborate and have a leadership role as public development banks.
Thank you very much, Remy. I'm sorry, I haven't managed the time very well, but do you have still some minutes for a conclusion word from your side, please?
I don't really know what to add to what Sergio said. He was extremely eloquent. I would say that very simple. 5 years afterwards, the SDG message has reached all of us, and you see that, Sébastien, in France. I mean. Of course, AFD, we heard the message loud and clear because we were in New York. We were discussing the Paris Agreement. But and that's way more significant now that this message has reached Caisse des dépôts et consignations, has reached BPI France, which is the climate bank now. And of course, they are 10 times bigger than AFD. And of course, they have all the networks and the connections, and it was a question and providing local financing in local currency, and that are key to really transform the way we consume, the way we produce, the way our system. And SDGs was addressed to them, to Sergio and to Eric Lombard, and not to me. We are only a link between the international and the national. And this is what happened for the last 5 years. And yes, I feel, I'm so happy, I feel such a strong momentum around the Financing Common Summit. That from the PDBs, of course, but also from the other actors. I was discussing this morning with Luis Pereira da Silva, fellow citizen of Sergio. He's the number 2 at BIS. So central banks are paying attention. I was discussing with a representative from the trade unions this morning. They are paying attention. And so if we build something strong enough, convincing enough, we will, it's not, again, to promote ourselves. It's just to play fully our role, which is specific, which is complementary to that of private finance, to that of central banks, to that of the fiscal capacity of governments in our financial system. And more broadly speaking, of course, And BDMG working with DBSA is a dream come true through international cooperation. For that, and I close by that, we need to move forward on several issues, and we will explore them during the Financing Commons Summit. I think we made very clear that we need an SDG framework at the time, encompassing for all financial actors, and we're far from it. I mean, there are 185 initiatives ongoing about aligning with SDGs, so it's probably too much. So we have to follow what happened for climate. We need clearer and stronger mandates from our shareholders, and we need third, we need incentives and a business model that will position our institutions exactly where is their added value. And these questions are still unresolved and need to be clarified through the dialogue, through with the help of IDDRI and others, to be as efficient, as collective, as powerful as possible. So I invite you really to register for the Financing Commons Summit, for the Visible Hand Conference. It's the last days because I think there are procedures to check for, so you have to really to register now. Thanks a lot. It's on the website.
Thank you very much, Rémi, Sergio, Maria Alejandra, for these very interesting discussions. I could not make exactly account of all the questions, but that was a very interested audience still following us. So thanks to the audience and participants. The few words that I just want to add to your conclusions is really the centrality of Agenda 2030 in these times of crisis, and that's really what we wanted to insist on in this aperitif to the Financing Commons Summit, and hope that we are going to continue the discussions on the research conference and following the summit itself. Thank you very much again. We are always very happy of that partnerships that we can have with this type of stakeholders that you represent, and see you in 2 weeks from now, 10 days from now, for these the follow-up in the big events of this research conference and summit. Thanks also to the IDDRI team for having supported us in the organization. Karine, Damien, the interpreters that we thank very much for our French-speaking audience. Thank you very much, and have a nice afternoon in Brazil and a nice night in Paris. Bye-bye.
Bye.
Thank you so much.
Bye. Thank you.
With my visible hands.
Both of them.